It's Tuesday, February 14th. This is an end of the day SPY recap, and today we end up with a 2-up bar. We made a new high from yesterday, but you can see it was a little bit choppy here. We ended up biased a little bit to the green side, but you had a very wide pre-market range between the blue lines, and then I'll show you in a minute, you had a lot of volatility internally, but nothing really changed in terms of the overall upward bias. Again, if we go to the weekly chart, what we're really monitoring for here is after we came up and took out this liquidity last week, we want to see, or 2 weeks ago actually, we want to see if we're just going to fail there and come all the way back through the range or some portion of the range, or are we just pausing and maybe working up towards higher liquidity? And that's kind of the context that we're monitoring the last week and a half or so. And you can see on the daily chart, we made that high up in here. This was actually the middle of 2 weeks ago. Then we kind of sold off a little bit to end the week. This whole next week was choppy price action pausing inside. So now it's a question what this week was going to bring. Are we going to possibly take the inside bar to the downside? Although, at least from my experience, you usually don't get a reversal on an inside bar like that. It's possible. You can come up there, get the inside bar and fail. You would certainly try it, but many times you want to see certain types of rejection bars like that, or a failure bar of some form. Usually when you're coming up there and getting an inside bar, especially after some other days earlier, in the week before that, it's usually almost a pause getting ready to continue more so than a reversal, but you never know. So we've just been monitoring all the action coming into this week. Are we going to possibly get a 2 down inside bar breakout to the downside, in which case we'd monitor for follow through to take out all these stops, or monitor for failure and come back up through the range. So we started yesterday pretty strongly with an opening bar right here, and it was kind of a daily signal, a 2 down, 2 up signal. And today you're kind of expecting that signal to broaden out towards those highs right here. These 3 bars are a compound outside bar there until proven otherwise. That's what you were expecting. So when we had this big CPI number this morning, it created a big range to monitor. And I kind of discussed pre-market, we were going to open up right in the middle of the range. We don't know exactly where it's going to go, but we'll watch the first 15-minute bar. So then we watched that bar. It came down a little bit, but then immediately came up. So there was an opportunity to buy calls in here. I shot a video on that. I bought some calls. And then as I was watching it, there were actually 2 different, there was this area here to take out a little liquidity, and then this was kind of the next target. And the bottom line is, when you're coming up here on that open, this is really your first target up here to, again, the 3 that you kind of know these 3 days are compound broadening of that. And I said at the time when I shot a video, that's all the market really has to do. Yeah, there are other targets up here. Certainly it could have continued, but you want to watch for that. But if at a minimum, this was an area to scale out or take even profits, because that was the target. Anyway, so at that point, you're monitoring, are we going to continue up here to the pre-market highs, all the way up to those daily highs way up here, or not? And you're watching this first bar kind of pause. That's normal. Then you had a big red bar come down. And at that point, I bought puts. And the reason was you kind of took out the halfway point. At this point, you could say you're failing on the 2-up day and maybe coming back to the midpoint of this bar. I didn't really see it exactly that way, because that usually happens right at the open when you come up to above the high and then you get a big red bar to start the day, take out 50% of the prior bar, then you're going to those lows. In this case, we kind of started down here, went up first, but we did take out the halfway point of that first move up, and we took out the open of the day. So the day itself was red for a moment. It's pretty high probability it was coming down to take out some stops down here. And that was really the trade. And as I discussed in the video, if we would break through there, then all sorts of, you can get a 2 down day developing. That could lead to the inside week break to the downside. There was a whole bunch of, domino effects if we would have continued lower. So anyway, I watched that trade, paused a little bit, went down. I took my profits here when it took out kind of the intraday lows, and then I was watching it, and I shot a whole video how I exited with a gain down here, and then I exited the rest of the position with another very small gain when it didn't follow through past these key lines we're monitoring. And as it turned out, the market then came up for the rest of the day. So what we end up with, the way I see it now, is it's very important to watch the open of Monday and the low of today. They're right next to each other, and that's the area where the market could turn down and trigger that weekly, reversal to the downside. But now you have a little, it's one of those weeks where at the moment you have an open down here Monday and Tuesday. It's near the low of the week. Sometimes those green bars go all the way up all week, and you see the open near the low of the week. So that's what's developing here. And as long as that's in play, you're going to be biased to be taking out. You see a lot of stops up here to kind of take out. Even if it wants to reverse, it looks like it's trying to head up there first. So we're going to look at the midpoint of today, going into tomorrow. We'll see the pre-market range. If we gap down and go below the midpoint of this bar, and we take out, I think, at a 2 down bar, then everything might reverse. This could be a reversal Wednesday kind of thing that could possibly trigger the inside bar to the downside. But until then, it looks like more and more that we're pausing up here, wanting to break out higher and actually take the inside bar to the upside, take out those highs, and maybe even broaden all the way up to those longer term targets. And again, we're watching this month of February. We're watching that yellow line. I mean, we want to see if that's the open of the month. It's not really following through strongly, but we're at midpoint of the month, and now we've tried a couple of times to come down. We can't do it. So this bar is looking more and more like it wants to stay green through the month, and that would target again all the way up here as well as time goes on. So let's keep that in mind. There is a reversal here on the breaking these lows, but until then, it looks to be wanting to at least take out these stops here on the next move up. But since we did broaden with these 3 bars to this 1 bar, it is possible you can get, wherever price action leads us, we can get a 2 down bar. We'll go with that. Until then, this week now, after 2 days, is anchoring on that open, and we'll just kind of keep an eye on that. And as long as that holds, we are likely heading higher. So we'll see where it goes tomorrow.